Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with the bullish scenario where we are looking for a finished WXY, where W is a flat structure, X a complex structure, and Y a zigzag, ending at the most common target area for a wave Y, which is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of W to the high of wave X. Common target for wave X is between the 1.236 and the 1.38 taken from the high to the low of W if a wave X goes above the start of wave W, so this is good to see, and now we want to see a continuation towards the upside. Now in this scenario on the lower time frames, we are then of course looking for impulsive structures to the upside over here, where we want to see this 0.618 being hit. Main reason for this is that as long as the 0.618 isn't hit on my chart, I do realize on Bybit it did wick into the 618, but on my chart it didn't. As long as for me on my chart the 618 is not hit, we could still have an impulsive structure to the downside where this range is a wave 4 and we are looking for a wave 5 to the downside. So in this scenario, what we are then looking for is a beginning impulsive structure to the upside where we have a finished wave 1, we have a wave 2 finished as well. And then we're looking for some sort of a diagonal structure here. Before then a retracement to the downside in another 1, 2, so that we have a double 1, 2, 1, 2. And then we're looking for continuation to the upside, where again, we want to see that 0.618 hit in this particular scenario. Now, as you can see, what I wrote down as well is if the 618 is hit, it increases the probabilities for upside in a wave 5, a bigger wave 5 that is, where this is then the end of a bigger corrective wave 4. But it also increases the probabilities of this high being the high of a wave 5, and we're getting a bigger WXY correction. And I then think about a bigger WXY because we then have a 3-wave structure instead of a 5-wave structure. And a 3-wave structure from the high is corrective, increasing the probabilities that at a later stage we will go up. And I mean these two scenarios over here. So here you can see the scenario where wave 4 is finished. If price hits the 0.618, probabilities go up for this particular scenario where we have a 1, 2, 3, 4 and then a wave 5, where the target area for wave 5 is between the 1.236 over here and the 0.618. These fibs, the 1.236 and the 1.618, are taken from the high to the low of wave 4, and the 0.618 is taken from the beginning of the move, the low over here, to the high of 3 to the low of wave 4, giving us a target area between 46.1k and 52.2k. The other scenario, as mentioned, is that the probabilities increase for the high of a wave 5, where then we are looking for a bigger corrective structure over here. But this one does have some lower probabilities because we have an expanding diagonal here in wave 5, which is extremely rare in general to see expanding diagonals. And also at the end on this time frame, 4-hour time frame, in a bigger wave 5 is not really what you want to see. And this wave 5 is also very long in time and price compared to wave 1, while wave 3 is extended. So usually wave 1 and 5 are quite similar in price and time, but that is not the case over here. Now, if we look at the bearish scenario, we are looking for one more move towards the downside in this flat here, where we then have an A, B, looking for C to the downside, which means we are looking for a 5-wave structure to the downside, where the most common target for wave C is between the 1.618 and the 1.618 over here. The 1.618 is taken with the trend-based fib extension from the high to the low of A to the high of B, and the other one is a fib pool from the low of A to the high of B. Target area 38.9k to 36.6k, with the 2.618 trend-based fib extension sitting at 34.6k. Now in this area we do have some additional resistance. As you can see, we have the golden box here sitting between 38.6 and 39k. Then we have some blue boxes here sitting between 37.7 and 36.4k for some extra support. In this scenario, we are then looking for a 5-wave impulsive structure to the downside, as you can see over here, where we don't want to see the 0.618 hit, as that would be an invalidation for a wave 4. On my chart we got very close. However, this candle did it closed below the 0.5, and now we are ranging right around the 0.5 Fibonacci taken from the high of 2 to the low of 3, but the 0.618 is not yet hit. So in this scenario, we are looking for a range to form in a wave 4, preferably as long or longer in time than this wave 2 over here, and then look for another impulsive structure to the downside to also fill the wick that we have over here. Now, as I wrote down here in the text box, the moment price moves down, it decreases the probabilities of a medium time frame scenario, the green one, where this is wave C, which then is the end of a bigger wave 4, and we go up in 5, and it increases the probabilities of the yellow one. And I will explain the two scenarios that I mean. So it decreases the probabilities of this scenario here, where if price would move to the downside once more, it decreases the probabilities of this being a green wave 4 for another wave 5 to the upside here. Reason being that this wave 4 is then very long compared to your wave 2, because then the low is going to be made after the 5 fib time, and this fib time is taken from the high of 1 to the low of 2 to the high of 3 to compare 2 with 4, and wave 4 being 5 times longer is not too common, so therefore the probabilities do decrease. There are still probabilities, there's still a possibility, we just observe the reaction that we get, but it is something that we have to keep in mind while this scenario increases in probabilities. In this scenario, we are looking for the flat to only be the beginning first structure of a bigger 3-wave corrective structure in a bigger wave 4. Here we are then looking for a wave 1, 2, 3 already in, 4, 5. And this wave 4 starts with an A or W, which then internally is a flat structure. Then we get a 3-wave corrective structure in BX and another CY to the downside. Reason I am then looking for a bigger sideways corrective structure is because of time. If we look at this yellow wave 4, it should be in relationship with the yellow wave 2. This 2 over here is very shallow, very long, which increases probabilities due to the rule of alternation that wave 4 is deep and short. But short for a wave 4 usually still means being longer than the 0.382 fib time taken from the high to the low of 2 to the high of 3, which means that wave 4 is at least 38% in time length compared to wave 2. So I would then look for scenarios that finish after the 382, which is sitting on the 31st of January, which, if we get a wave 5 to the downside here, only happens if we get a bigger corrective structure. So generally a bounce is expected, but the main question will be, if price does move down for a wave C, will it bounce correctively in then a B or X, or will it bounce impulsively to move up for a wave 5? That is the question. Now if we look at this range over here locally, then it's typical Bitcoin, trade the range until it breaks. Of course, no financial advice, you know how it goes, but we have been ranging here for a while now. We escaped for a little bit and we are back inside the range. Over here we have the resistance area, the white box, and we have the support area at the lower end of the range. Value area low, point of control, value area high. We move back inside the range. Yesterday during the live stream we observed the reaction over here. This was a target, found support, now moved back inside the value area low, and we have the point of control above, which also of course is above the 618. So this is very, very important indeed. We found resistance at the monthly 45.5k, but above we still have a yearly as well at 46.2k, which is very, very interesting indeed. On the lower time frames here, we do have some divergences, right? After a big wick, I don't like to look for divergences with the wick, as these are less trustworthy. So I prefer to look at the divergences more locally here. We had some bullish CVD divergences as price was working its way here towards the upside, but all of these already played out. So now we have to wait patiently and see what else we get more locally as the range continues. So if we then look at the probabilities of the different scenarios, then currently on the medium time frame, the probabilities are higher. We are still looking for a move towards the upside either now or later. Number 1 over here and number 2 are very, very close to one another. It's basically almost 50-50, as it mainly depends on the 618 touch on my chart here. But I on one over here have a potential finished wave 4 with the WXY. Also another reason why I would like this, but this is a personal opinion, is because many people are looking for the ABC, which means people are looking for price to move to the downside over here. And if it can go to the upside, then these people waiting to buy here or look for positions here are going to miss out, and they have to buy later. So that is just an interesting thought. But hey, we first need to touch the 618, right? On the second position, we then have that ABC, right? That's very, very close following up number 1. These 1 and 2 is very, very equal. And then on the number 3 position, wave 5 is finished, and we look for a bigger WXY. Main reason that this has for me the lowest probability is because the wave 5 finishing over there with an ending diagonal is just not something that I really enjoy seeing, and it's also rare. And as long as the other scenarios still have probabilities, this will always have the lowest probability as an ending diagonal. Expanding diagonal, sorry, ending expanding diagonal always has the lowest probabilities unless the rest is invalidated. On the low time frame over here, we just focus on the 618, as that is very, very important. As explained in the video, it is the WXY for me over here versus the ABC to the downside, where we look for one more low, and the range that we get locally will give us all the information we need. A WXY will leave people behind, and we do have a big wick which tends to get filled, as explained in the live stream yesterday as well. We do have a big wick over here. Also on the daily, we have a proper wick to the downside. These do tend to get filled at a certain moment. So what is the plan? Continue to look for this range locally over here. Be very, very patient. Look if the 618 gets hit or not. And based on the local market structure over here, we can reassess the probabilities later at the update at 1 p.m. Central European Time. As at the moment, the WXY and the ABC are pretty much 50-50. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.